56, 65, and 74. Pivot 26, resistance at 32, 43, 56, 65, 74. Support at 17, 09, 39, 98, 90, and 83. All right. Again, the market here kind of trying to rebound a little bit. The inflation consideration from the Fed continuing to raise rates is overpowering the market. There's no sign that they're going to slow down, or at least cut back on their rate hikes, and it's creating a little bit of a nervousness in the market. It is what it is. All right. Well, we'll see what the day brings. Welcome some of the new folks that are here. We are trading mini S&Ps, looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action opportunities that might occur. A combination of both of those gives us our setups or our trading opportunities, and try to scalp the market. Like I said, we're looking for about 2 or 3 points on our trades, depending on volatility and how you manage those trades. And all those things are individualized risk situations that you have to manage independent of anybody else. So if you have any questions, feel free to ask in the chat. As we open up here, kind of hanging around our pivot here at 26. And for support level on the downside is down at the 17 area. And if you look at the chat box, you'll see the levels that we printed out for you. Let's see, we did have numbers coming out this morning. Let's see if we got anything else coming out. We had GDP fourth quarter. They were estimating coming at 2.9, came in at 2.7, and thus a little rally in the market because bad news is good news now. GDP to price index, a little hotter than that. They were expecting 3.5, came out at 3.9, and the core price was at, they were expecting 3.9, came out at 4.3. So the inflation numbers were a little hot, but the overall second estimate of GDP was a little bit downplayed. They were expecting 2.9, came out at 2.7. So that came out at 7:30. And there's nothing coming out here at 9, but at 9:50 there is a Fed speak, and then at 1 o'clock there's another Fed speak. So we have a few Fed people yakking away as we are just kind of hanging here around our pivot. I mean, again, we have to show some patience here and waiting for opportunities to trade, because we don't like to trade it when it just trades in a little bit of a range here, and you'll get opportunities. You just have to be patient. The important thing is to get into trades that are meaningful, have a good opportunity for you to make a little bit of money, not just to trade for trade's sake. Obviously, you could do that. You could just jump in, and if you have a feeling, we try not to trade on feelings. We try to trade on logical uh, technical reasons that we believe the market will help us. Otherwise, we are just kind of guessing as to these moves that the market's going to create. All right, let's see here. Bond rate on the 10 is down. Well, 10 is 395. Again, pushing at 4% yield. It's right around that 395, even though they're up here on the highs. So we are just hovering around our pivot here, going nowhere fast. So patience is important. All right, we're just kind of hanging here on our pivot. Again, if anybody has any questions, feel free to ask. All right. So no numbers today, and looking at just a couple Fed speaks at 9:45 ish, and at 1. So kind of a quiet day. We had GDP's second revision of GDP come out already, and you can see kind of rallied a little bit. Bonds rallied because this is bad number, bad number. You know, it's very hard to figure that out. We shall see. Let's see. The question that was a question last month's FOMC. And monetary policymakers debating how much tightening would be needed to rein in inflation without shocking the economy. The minutes showed, yesterday's minutes that were released, showed that almost all the officials agreed it would be appropriate to raise rates by another 25 basis points, but there was a few that could have supported a larger 50% basis, 50 basis point hike. As investors debated the hawkishness and dovishness signals that arose out of those minutes, stocks rose and then fell. And the equity futures are climbing overnight. Several other topics that also discussed will include financial stability, the labor market, and even crypto, while Chair Jeremy Powell warned against complacency. Okay, there you have it. Basically, they're going back and forth. So those are the minutes that were released last night at 1 o'clock in the afternoon, and kind of rallied a little, then broke it, then closed on the lows, and then kind of just, and we're just opening up back here a little bit higher. And we shall see where the day brings us. We just never know what kind of opportunities you're going to get, but you always have to be ready for them and try to take advantage of it when they present themselves. Sometimes they come quick, fast, hardly have time to get out of one, get into the other, and then other times it's kind of just slow. That's where we're at, and we are in the slow part. But it's okay. Nothing wrong with that. We dip down to our blue band area there if you're a little aggressive, depending on your aggressiveness in the market. We're just kind of hanging here right around that blue band area, 21. See where it wants to go. We got support down at the 17 area. Our green band is coming in there at 15 and change. So little areas of support down there. If you are going to scale in around there. Let's see, off the news here. Let's see, there's a big battle taking place in the Supreme Court this week that could reshape the future of the internet. At issue are the legal rules that govern harmful online content and who is responsible for their publishing and dissemination, I should say. Being heard in a case of Gonzalez versus Google, which centers around extreme clips on YouTube, as well as Twitter versus Tamna, which also surrounds the terrorist posts and algorithms recommendations. Pivotal to the discussion is Section 230 of the Communications Decency Act, which was established in the early days of the internet in 1996. It provides legal shield that protects tech companies from liabilities for their users' posts on their websites by classifying them as platforms rather than publishers. It also allows social media companies to moderate posts that they deem to be obscene, lewd, excessively violent, harassing, as long as they are acting in good faith. And we come back up here to our pivot, so we're kind of quiet. Not much is happening. A little support there at the blue band area if you were a little aggressive. If a little, again, if you wanted to. You would have had to do that. Then it's coming back down here really quick. So a little pop up there. And let's see, we still got support down at 17. So we'll see what happens. Like I said, the blue green band's at 15. So kind of keep that in mind. Any changes to current status quo could be detriment to Google, and investors should be aware of the pending potential risks. There's also a possible change to Section 230, consequences for the advertising revenues, historical party views of Democrats and Republicans on the matter. Even if reforms or reinterpretations do take place, platforms may not be impacted equally, as can be seen in the comments below. While a ruling could take months, the Supreme Court justices have so far voiced hesitation in the impending current protections, especially if there would be far-reaching consequences that would be hard to predict. However, they are exploring whether there should be legal liability distinctions between hosting and promoting user content, and whether the companies would be held responsible for aiding and abetting under the Anti-Terrorist Act. Well, it's good to know what's out there since it's a slow business conversation day. I saw that they were talking about it the other day, and I didn't quite understand what they were arguing about, but a little better explanation, I guess, if you cared, since there's not much happening. Again, if anybody has any questions, feel free to ask in the chat. You don't have to raise your hand. You can just, whatever questions you might have, Bill, just put it in the chat. And if you put it to host and the panelists, we are the only ones that would see it. So all right, coming back down here to our blue band area. Very, very quiet, kind of range bound here. A little support down at 17. Again, whatever we do, we are always using our stops, right? There's no reason not to use your stops. Not gonna like yesterday, we got kind of run over a little bit on the first level, but which we finally got. Took forever, but we did all right on the next opportunity. We don't have any numbers coming out. We do have a Fed speak at 9:50 and then at 1 o'clock if you're going to be trading later on. There is Kansas City manufacturing survey, Kansas City Fed manufacturing survey coming out here at 10. Not really a big market mover, but you never know. But they don't come out at 7:30 or 9 o'clock. They're not usually a number that the market is focused in on, but it's out there as we drift back up to the pivot area again. All right, coming back up here to the highs here. We got resistance around the 32. A little choppy up here. Now we're coming up here to the 32 area. Whoa, there we go. Nice little quick rotation down there. That was a little surprise. And you got to have your orders in place, right, to be able to take advantage of that, and your exit strategy in place as well. You got a quick 3 quick points there for doing nothing. Obviously, we said 32, but we're scaling in, so you have to get in there at the 31. Well, I had my order in 31, and now we're just continuing to push back up here. Yeah, our pivot to this morning is 40.26. 40.26. The resistance here at 32, which we already got triggered, and then above that 43, 56, 65, and 74. On the downside support at 17, 09, 39.98, 90, and 83. Same time this is happening here in the S&P, so the bond market spiked as well. Remember, we follow bonds sometimes, and then we don't after that. So we tend lately has been following bonds in the morning. So I don't know why. Maybe they hit some stops there in the bond market, popped it up here. Maybe there's somebody talking. I don't know. Maybe somebody said something. If you did take the 32, we got up to 34. Remember, if you once we got triggered at 31, 32 became a little bit more tenuous. Maybe you adjusted a little bit. This is where you have to act really fast. I mean, this is what happens sometimes. The market is like dead, and all of a sudden it's like you get some volatility and some movement, and you have to react really quickly to what's going on. All right. And this is a perfect example. It was dead, and then all of a sudden we get filled on 31. They flushed it down. They come back up here, push it to 34. Maybe you adjusted, maybe you didn't. But if you kept it there at 32, you're getting a little bit of a rotation here. And see if you can get A few points here again. Maybe you adjust it to the upside once we got filled at 31. That's a possibility also. I mean, it's a reality. It's what maybe could have happened. And now we're getting if you did stay with the 32, you're getting a nice rotation here against it, giving us our 3 points right now. So nice little rotation either way. If you kept the 32 or if you didn't, maybe you adjusted a little bit higher than that after we got filled there at 31. And you're getting a nice rotation here again. So we're taking advantage of ebbs and flows of the market. This is again another perfect example of we're looking to get in and get out and then let the market kind of do its thing after that. We got filled there at 31 and then something happened. Somebody had a big order and they crushed it down to 27 like a flash and then brought it right back up to the 34 area and then coming back down here slowly. So hopefully somewhere along the line you were able to jump in, take advantage of this 32 area that we had. Again, if anybody has any questions, feel free to ask. And, like I said earlier, everything was quiet, and all of a sudden we got a little injection of some volatility, and you had to kind of be on your toes there. All right, so now we're just kind of hanging up here. And there we have the levels in the chat for us. And those are the levels, again, we're going to use as a guide. As you can see there, the 32 level was our first resistance area that got triggered, and we had a nice little rotation here against it. And we're just kind of hanging up here. Bonds also staying strong. I mean, this happens in the morning where we kind of follow bonds and then they kind of disassociate themselves with us and them. So I don't know if that's going to continue today or not, but they're on their highs here and they spiked, and we were just kind of, oh, it's a little bit better. And we are continuing to push a little ahead as well, looking at the 43 area next. Again, we really are not trying to figure out why things move. All we're trying to do is take advantage of the opportunities when they present themselves. All right, we're just kind of hanging up here on the highs, sort of bonds. All right, we're just kind of hanging here on the highs. It looks like that if we get above 35, we might have a push forward a little bit. We shall see. Forward meaning up, I guess. All right, we're just kind of hanging here in the highs. Anything above 35, we might try to push a little bit higher, looking for the 43 area above. We're just kind of hanging here on the highs. Again, looking for a push above 35 to get us a little bit higher. All right, we're just now kind of hanging up here on these highs. Bond market also hanging on the highs. Maybe they're kind of watching it to see where we're going to go next. The bond move gave us that little push up here to our 32 area, and now we're just kind of hanging here. So we'll see where we go next. Right now, support would be, well, it depends on how aggressive you want it to be. If you're going to try to pivot here the first time to it, otherwise look for the 17 on the downside. Now we continue to downtick here a little bit. If you're a little aggressive, like I said, maybe you're going to take the pivot opportunity. If not, be a little bit patient and wait for the 17. Seems like we're trying to follow the bond market here as bonds kind of push to the lows of this little move. We'll see what happens here. Again, if you're a little aggressive, you're taking this pivot play here for a little bit of a scalp. If not, then just wait for the 17.